Hi everyone, welcome back to the channel. Fawad Razaqzada here, StoneX Market Analyst. Today we are talking about the sharp drop in crude oil prices with Brent sliding towards the $61 level, its lowest point this week. There's a mix of geopolitics, economic data and supply dynamics behind this move. So let's break down what's happening and what could come next. Oil's latest decline kicked off after reports suggested that Ukraine has agreed to the outline of a potential peace deal with Russia. Now, nothing is signed yet. There's still a lot of negotiations left, but markets reacted immediately. Risk sentiment improved in Europe. Here, equity indices rallied and the euro-dollar also bounced back. But why did oil prices fall? Well, partly because the peace in the Ukraine-Russia conflict could mean sanctions on Russia may eventually be eased. And that could bring more Russian supply back into the global oil market that is already pretty much well supplied. More supply equals more downward pressure on prices. Even before this geopolitical shift, crude prices were struggling under heavy bearish pressure. WTI had been on a multi-week losing run and holding below that psychologically important $60 level. The OPEC Plus has been releasing previously withheld output over recent months. In simple terms, they are pumping more oil and the market doesn't really need it right now. Then you've got the US shale producers who've been producing more than needed as well. That extra output adds to a growing global glut. When too much oil hits the market, prices naturally fall. And right now, oversupply concerns remain front and center. Supply is only half of the story, although a bigger half of it when it comes to oil prices. But the demand outlook is also looking shaky. Recent US economic data has been soft, raising questions about whether oil demand will hold up heading into next year. If demand weakens while supply keeps rising, then the market could tip further into oversupply. In that scenario, oil may need to adjust lower to find a new equilibrium. However, without stronger economic data or signs of improving demand, crude prices could remain under pressure. From a technical perspective, the chart of oil tells you everything you need to know, really, as shown by the daily chart of Brent crude. Prices continue to print lower lows and lower highs, which is a classic downward trend behavior. The key level to watch right now is at $60 per barrel. It's a major support zone, and if Brent were to break below that, the next downside target is at 58.25, which was the low back in April. Unless something changes fundamentally, we could easily see a continuation of the current downward trend in the days and weeks ahead. So, between improving geopolitical conditions, rising supply, weakening demand, and a bearish technical picture, crude oil is facing pressure from pretty much all directions. Let me know in the comments, do you think oil breaks below 60 or does it bounce back from here? Don't forget to like and subscribe if you found this breakdown helpful. Thanks for watching and I'll see you in the next one.